Good morning and welcome to Weekly Profit Talk. Every single Wednesday at 8:30 a.m. Mountain Time, we spend a few minutes talking about the things that make your private physician's practice more profitable. Quite often, since small medical practices are a business, some of the advice that we give is actually helpful for people that are in other types of business. And this, I would think, would be one of those weeks actually, because our topic this week is. And just a second here. What accountants wish every practice owner did before tax season. So let's run over this. Like I say, even if you're not a doctor, this could come in useful for you. At the very least, you ought to come away with a little bit of an understanding of what exactly we're looking for. So let me share something with you, and we'll get started. So with that, what accountants wish every practice owner did before tax season. Here's the view from the other side of the desk. This is me looking at you, okay? So, the ideal client comes prepared, and it made that into a little math formula. Um, Basically, if someone comes in, and this happens quite often, you'll get somebody that's just absolutely unfamiliar with taxes. Maybe it'll be somebody young. Usually, introduction to tax returns occurs when somebody's working for another person. They get a W-2 at the end of the year. And actually, those are very easy returns to do because basically you just need the W-2, input the data from it, make sure that you're hitting all the possible other inputs. And there are a lot of things you can do to reduce tax, certainly. But W-2 wage earner tax returns, unless there's some outside complication, usually take about 10 minutes and they're really super easy. What we're talking about is for business owners here. So, um, expenses summarized on spreadsheets, not a pile of small receipts. We call it shoebox accounting. And I'm going to tell you, if you come into my office and you got a box full of receipts, I'm going to charge you extra. I have to because of the time it takes to go through them. An ideal situation to do a tax return is if we have things summarized. There's a thing, and if you've spent any time in college and had to write an executive summary, you take a long paper and you boil it down to one page with bullet points, and it kind of gives you an idea of what you're about to read. If you are able to provide your tax preparer with an executive summary of the way your year went, that is the ideal scenario. As long as you've got accurate numbers. Let's say, for example, you got 40 or 50 receipts, but you've sat down and did your 10 key calculations or added it up on an Excel spreadsheet, came up with one number for advertising and one number for office supplies and one number for the rent that you spent. Perfect. That's what we're talking about. So, with complete and accurate profit and loss statements and balance sheets, especially if you're taxed as a corporation, because the money that you take out of your business actually has an effect on the amount of tax that you pay. Um, I'll give you a quick idea what that means. The balance sheet has three components. There's assets, liabilities, and equity. Assets are what you own, liabilities are what you owe, and equity is your stake in the business or what you have invested. So uh, basically, there's a direct math relationship between these three things. Your liabilities plus your equities added together is going to equal your assets right down to the penny. It has to. It's a mathematical certainty. So assets include cash and the things that you own that cause you to be able to make the money that you make to do whatever you do. Like, let's say, for example, you're a landscaping company and or honestly, let's use a medical practice because who doesn't have large assets like a medical practice? Let's say you have an X-ray machine in the office as well as other diagnostic equipment, RFA machines, ultrasounds, that kind of thing. All this stuff costs money, and it's going to be well into the four figures investments or more. And a good X-ray machine could be six figures, really. So this is what we call a fixed asset, which means it's something that you're going to own for over a year and it's going to continue to make you money. You're able to depreciate that asset. And sometimes, if your income situation is right, you can depreciate more of it than normal and what we call bonus depreciation. So, um, this is where your profit and loss excuse me, your balance statement comes in handy because assets are on the balance sheet. Okay, so, but let's talk about equity for a second. There are three things that affect that. And this is super important. One is the income that you make. Your net income for the year appears as part of your equity, your incoming money. Another thing is the money that you put into the business yourself, called contributions. Let's say it's near the end of the month. You've got the $300 vendor coming out, and you only got $200 in there. You got to run to the bank, throw cash in there to bring your balance back up. If you are contributing that out of your personal funds, then that is called a contribution, and that increases the value of your business. So you got net income, you have contributions, and then as you make money, you're entitled to take some out because you're certainly going to pay tax on it. So those are called distributions or draws, depending on what kind of entity you are. Now, you want your distributions to be less than your net income in any one year, especially if you're an S corporation. Super important. That's why a good balance sheet as well as profit and loss statements are important. Now, all the other stuff that you get, if you cashed in part of a 401k early, you're going to be penalized on that. But all that information is going to appear on what's known as a 1099-R. You'll get that from whatever, Schwab, Fidelity, whoever it is. You also get these 1099-Bs. That's if you're with Robinhood or let's say even somebody like Merrill Lynch or Edward Jones is managing your investments and you decide to cash in 5,000 bucks to buy something. Well, what happens is you have a sales event uh, and the amount that you sold that you had already invested is called the basis. No problem there. But if the stocks made any money while they were sitting in there, um, and then you sold that, then you have what's known as a gain, and you do have to pay tax on that. So your 1099-Bs, and we need to see the actual IRS forms that are issued by these companies, 1099-R, 1099-B. You throw us a statement. First of all, it's going to be difficult to understand. It's also not going to be accurate. So it's just, even though your intentions are good, it's not helpful. Okay, so let's move on to the untold secret. Tax season chaos is expensive. Even if you get it all figured out in the end, and you and your tax guy hunker down in the tall grass and you get it all figured out and everything, that takes time. Time is money. There is what I like to think of as the time money continuum. You probably heard of space time, especially if you like science fiction. Um, I think Einstein came up with the theory of relativity. Basically, space and time have a relationship with each other. Say you throw a baseball very, very high up in the air, but toward um, the second baseman. In space time, it takes 10 seconds to get to him because of an arc. And let's say a pitcher throws from the same position and beans that thing in there at top speed. Well, it takes the same amount of space time. And time money has this same relationship. Okay. So um, if you spend what could be, and for a doctor, what is your time worth? Can you bill five, six, $700 an hour? If you spend several hours on your taxes, that's money that you're losing. So there, there it is, the time money continuum. Here's another thing that you need to be aware of. If you decide to make it exciting and show up at your accountant's office in early April, chances are you're going to pay more for the same return. Jackson Hewitt does it, H&R Block does it, and I'm sorry, but I have to do it too. And the reason is it's extremely stressful. There's nothing like having somebody come to you on April 11th and saying that they've got to beat the deadline. First temptation, of course, is to say, well, nope, we're going to do an extension, and then I won't have to charge you 20% more for the same return. But quite often, it's got to be done for some reason. It's usually something emergent that wasn't planned for very well. Like suddenly they decide that they need to buy a house, so they need their tax return. It's going to cost you more. Keep that in mind. It's true. Um, if you resolve this year to stay organized monthly, next year won't be a three-alarm fire. And I think I put an extra N in there, but uh, I'd like to touch on what this means. Basically, if you take care of the accounting that you're doing month by month, and I mean, if you're creating a profit and loss statement, a balance sheet, that means you've got some kind of book software anyway. Keep up with your transactions. Take a look at that 2 to 4 times a month. Ideally, we do weekly for our clients, and basically, this gives you a good, clean scoreboard from which to call your plays from, too. So, not only that, but you're basically understanding exactly where you are as you go at any point during the year. You get to the end of the year and you don't have a hair on fire situation. So, doesn't that sound better? Um, Now, for a different kind of relationship, what I want to talk about here is basically what would it be like to have a guide uh, on your entrepreneurial journey? If you think about it, some of the best movies that are ever made, the main character wasn't the hero, but the person that guided them. I always think of Yoda, for example, and I'm not the biggest Star Wars nerd, but Yoda was pretty cool, and he basically made Luke Skywalker what he was. So that's an excellent guide story, and there are other ones certainly. I'm not thinking of any right now, but um, having a ready guide in some celestial voice, as the song Free Will by Rush says, um, is super powerful. So imagine having all of your tax paid by the middle of January. Let me say that again. Imagine having all of your tax paid by the middle of January. When you go to file your taxes, that means you don't owe. You should be at somewhere between either owing $500 or $500 refund. Does that sound impossible? It's because you haven't had the right help yet. Imagine having good, clean records for tax season. And now, picture this, looking forward to your tax filing for the measurement of your business that it is, knowing that you won't have a last minute cash stress. That's right. I can't tell you how many first-time clients I get, and they owe five, seven, $10,000 in taxes. First of all, they've got to find the money or else go into debt by doing an installment agreement with the IRS, which means they're paying monthly and they're paying extra because they got penalties and interest on top of it. So, or the other thing is wiping out a savings account that you actually wanted to do something with to pay your taxes instead. No bueno, senor. This is not the situation you want. Okay. It is possible to actually look forward to tax season with no cash stress. You want to know more? Ask. And that's where I'm going to conclude here. So it's a simple matter of jumping on one of the three media you might be seeing this on, either live or in replay. We're coming to you live on YouTube, LinkedIn, and Facebook. So all three of these have a comment capability. If you jump in there and say help or more information or let's talk, whatever you want to say, we will answer you and we'll show you how to book a free 30 or 45-minute call with me. And let's talk about how we can work together to make you more affluent. We can save you $10,000 to $25,000 in taxes if you're a small medical practice the first year that we work with you. That's right, $10,000 to $25,000. What could you do with that money? Something better than giving it to the federal government for no reason, certainly. So it is possible, and you can do it and also eliminate your stress and actually focus your time on what you're best at, what you spent 10 years in school and residency learning how to do. So if that sounds good, reach out because we'd love to hear from you. So until next week, we do this every single week at 8:30 Mountain Time. That is 7:30 on the West Coast, 10:30 on the East Coast. And we will see you next Wednesday, which is the 20th of January. Until next week, please do have an amazing day and rest of your week, an awesome weekend. And if you get a chance today, do something randomly kind for a stranger.